This is why Visa is the best business in the world. And today, I will tell you why. But first, what is Visa known for? Visa is known for its largest payment network in the world. I want you to picture this. Today, you and your best friend woke up and got extremely rich and wealthy and took both of your credit cards to go shopping. Both of you bought some luxury watches like Rolex and some luxury items from Louis Vuitton and paid using credit card that uses Visa's financial gateway. But the winner, at the end of day, is Visa. Visa doesn't lend money or take credit risk. It operates a global payment network that connects cardholders, banks, and merchants. Every time a payment is made, Visa securely authorizes, processes, and routes the transaction, earning a small fee from financial institutions. As digital payments grow, Visa benefits from higher transaction volumes with minimal additional cost, making it a highly scalable and profitable business. Visa's revenue has grown consistently from $29.3 billion in 2022 to over $43 billion TTM, reflecting the steady rise of digital payments worldwide. Unlike traditional businesses, Visa doesn't manufacture products or lend money, which means it simply earns a small fee every time a transaction is processed on its network. More transactions mean more revenue with very little additional cost. Visa's net income has increased from $14.6 billion in 2022 to over $22 billion TTM, demonstrating strong profitability and efficient operations. Its asset-light business model allows much of its revenue growth to flow directly to the bottom line. As transaction volume increases, Visa generates more profit without significantly increasing costs, making it one of the world's most profitable businesses. Visa demonstrates exceptional financial strength across key metrics. Its 58.81% ROE and 29.89% ROIC far exceed the 12 to 15% benchmark, showing outstanding profitability and efficient capital allocation. A debt-to-EBITDA ratio of 0.85 indicates conservative leverage, while a current ratio of 1.09 confirms sufficient liquidity to meet short-term obligations. Together, these metrics highlight Visa's high-quality, financially resilient business. In terms of market share, Visa dominates the global card payments industry, processing over half of all purchase volume among the four major card networks. With a 52.2% market share, Visa is more than twice the size of MasterCard, 24.9%, while American Express holds 19.5% and Discover 3.5%. This scale creates powerful network effects, making Visa the world's leading payment network. Visa's clients are mainly banks, fintech companies, merchants, governments, and businesses, not individual cardholders. Banks issue Visa cards, merchants accept Visa payments, and fintechs integrate Visa's payment network into their services. Every time a Visa card is used, Visa earns fees by securely processing the transaction between the bank, merchant, and customer. Visa has a wide moat because of a massive loop and ecosystem where more shoppers using Visa means more stores must accept it, which brings in even more shoppers. This global payment network, VisaNet, processes billions of transactions cheaply and is incredibly hard for rivals to copy. Because banks and stores are so deeply locked into its system, Visa remains the undisputed king of digital payments. Remember, a DCF model isn't a crystal ball. It's an estimate based on future cash flow assumptions. According to our model, Visa's fair value is $349.07, compared to its current price of $357.25. That's a 2.34% premium, suggesting the stock is only slightly overvalued, not dramatically overpriced. These are actual entries I shared in my paid community, which is soon to be released. Rather than chasing headlines, I focus on buying exceptional businesses backed by research, intrinsic value, and long-term conviction. If you want to see every analysis before I invest, stay tuned for my paid community coming soon. Comparisons with competitors? Compared with MasterCard and American Express, Visa stands out with industry-leading profitability while maintaining strong revenue and earnings. Although American Express generates higher revenue, its business includes lending, making it less comparable. Visa's asset-light model delivers exceptional ROE and ROIC, highlighting why it's one of the highest quality businesses in the payments industry. Stock performance over the years. Price returns only tell part of the story. While American Express generated the highest one-year return, it came with higher volatility due to its lending business. Visa offered more consistent performance, reinforcing its reputation as a durable, high-quality compounder. Long-term investing is about consistency, not just the highest returns. While American Express outperformed over 5 years, Visa delivered steady growth with lower volatility, reflecting the strength of its asset-light business model and durable competitive advantage. Since going public, Visa has been one of the market's best compounders, returning over 2,300% to investors. Its consistent growth, strong competitive moat, and resilient business model have enabled it to outperform most financial companies over the long term. So when to add Visa stock? Rather than chasing the stock higher, I use these support levels to plan potential entries. If Visa pulls back, 321, 294, 271, 253, and 227 are the key price zones I'll be watching for signs of buying strength. Any recent acquisitions? Rather than relying solely on organic growth, Visa is expanding through strategic acquisitions. The purchase of Prisma and NewPay strengthens its presence in Latin America, broadens its payment capabilities, and reinforces its long-term strategy of leading the global digital payments industry. So what is Visa's catalyst and risk? Visa benefits from powerful long-term tailwinds, including the global shift to digital payments, growing consumer spending, expanding emerging markets, and strategic acquisitions. However, investors should also monitor risks such as economic slowdowns, regulatory changes, increasing competition, cybersecurity threats, and geopolitical uncertainty. So, the end verdict of Visa is an excellent company. Overall, I believe Visa remains one of the highest quality businesses in the market. However, rather than chasing the stock at current prices, I'd prefer to be patient and accumulate shares on pullbacks toward key support levels. Great companies are worth owning, but buying them at better prices can significantly improve long-term returns. Thanks for watching. My mission is simple: to make investing easier by sharing free, high-quality stock analysis and financial education with everyone. If you found value in today's video, please consider liking, subscribing, and sharing it with others. Together, let's become better investors, one company at a time. See you in the next video.